Voila! Send notification. I guess I'm live. I've been getting, friends have been texting me. I guess there's quite a few friends that log in on this shit. To see you, boy. Morning, Joe. I've gotten 3 texts this morning. Where are you? Where are you? Where are you? All by myself anymore. DraftKings go back up to where I bought it? Nope. PayPal back up to where I bought it? Nope. Is Sedge back up to where I bought it? Nope. Is Bank of America under 30? Yep. I got some stuff. I'm waiting for my buddy to tell me when we're going hiking today. I've got to go over here, and we're going to go. I think you can hear me. I have to. Active Trader Pro. There we go. Okay, and I'm going to go today. And let's go to. Hit that thumbs up button. Okay, it sounds like I'm okay. Wah, wah, wah. We're going to go to TrendSpider. No Gary withdrawals. I think there's one person that gets Gary withdrawals. One person in this world. Well, maybe 3 people because my parents do too. But, Scott, you will have withdrawals next week. Next week's when I'm getting my wisdom teeth taken out. And I've been called old many times. Let me make sure this is. Scott, you will have. I'll wait to see that. Tell me if I echo again. I don't think I will. I think what the echo was me having some processing in OBS. IONQ is down 1.48%. Let's go to dailystockpick.substack.com, and then we'll do Linktree as well. Hold on. Dog is crying. Do you need your own bed? She took up the whole bed? I'll get you bed. I'll get you bed. Okay, here's your own bed. Okay? There you go. Come here. Come on. You want to go under? Okay, there we go. Okay. There we go. Have I told you guys how much I love my dogs? Scott, I'm happy to do that. I mean, you need anything, just ask. The information's out there. I'm intrigued by those high yield ETFs. Okay. I may have to get off quickly here. Let me see. Pod done quick. Okay. Let's do some scans. But that I own SPY and Scott, I don't know if you have TrendSpider, but if you got TrendSpider, there's a covered call ETFs, and that's where I got that list for you. Like QILE is up 2% for some reason today, but a lot of these are brand new, so you don't have a lot of history with this. Like this is NUSI, Nationwide Nasdaq 100 Risk Managed Income. and they just buy derivatives, that meaning options and calls and puts and whatever. They buy stuff like that. And it basically rounds it out. Some of the videos that I gave you show you exactly what I gotta put my do not disturb on. Show you exactly what they do, and they do it in a much better fashion than I can even explain. These guys do hours and hours of research to try and figure it out. So if you have any questions like that, just ask. But you and I mean, we're only like 10 years apart. So I'm kind of moving towards that as well. I'll perfectly honest with you. The mindset, it's funny because I've always thought I was a 5 out of 10 as a risk trader, investor, quote unquote investor. And then as I started to talk with financial analysts, I found out that I'm probably an 8 out of 10 risk. As far as, I'm not doing options. I'm not doing, hey, oh my God, let's do SPY options that expire list Friday. I'm not doing shit like that. But as far as the investments, picking individual stocks, making sure that I try and beat the S&P and things of that sort, I am probably an 8 out of 10, maybe an 8.5. Because I focus on growth. But as I've gotten older and I've retired, I'm 3 years retirement now, and I haven't taken capital to live on, which is great. I mean, that's essentially the goal, is to live on whatever you make, whatever you have. I've been able to use the MLS job. I've been able to use this podcast because I do make money off of this podcast. It's not enough to live. Trust me. I mean, we're talking, $5,000, $4,000 a year. You're not making a lot of money off of this thing. Anybody with a podcast will tell you it takes millions of listeners to actually turn a profit into, an actual living. There's guys like My First Millions. They don't need money, but they got a podcast where they're probably making really good money. For the rest of us, it's probably not really good money. That to them, they're probably thinking, God, why do I do this for, only a couple $100,000 a year? I was listening to their podcast the other day, and they were talking about how much they spend $35,000 a month on credit cards, each of them. Between $30,000 and $35,000 a month on credit cards. I can't imagine spending that much money. I mean, my credit card bill a month is maybe $2,000. And that's mostly for insurance, subscriptions, business expenses, things of that sort. So it's kind of interesting. But yeah, these things, as far as income goes, I mean, at SPY, I've made 1% a month. I can tell you, the $10,000 that I got in there, I thought I was making $1,000, but it's not 10% a month. I'm making $100 a month. So it's paying me $100 a month to have $10,000 parked there, which isn't bad because, you're only making 5. If let's look at SPY. I bought it back here. Oh, I got to sneeze. Oh boy. Oh, COVID. The dogs have COVID. Oh, man. But yeah, SPY, you got this. You got in at $49.44, got you out. You're at $49. I mean, it went down hard yesterday. It doesn't react well when the market goes down. And that's what's hard with this one, is from a long-term standpoint. If we even look at a weekly, I don't think we have a 50-day, or no, we don't. But if you run the, let's run the 65-minute on this one. Thank you. Good morning, Sherry. Okay. Thank you. I'm going to go hiking at noontime, by the way. So just so everyone's aware, that's why I'm kind of getting out of here. 65-minute, you don't have any confirmation. There's a gap up here, but at 50, should be filled. I mean, under the 200-day there. 200 days kind of turned a little bit. But it's a great list. I think that list that I sent you, I think it's a good list to kind of look at. I think it's a great list to if you're looking for income towards retirement. I don't think it's a bad list at all. I just think that you know, a lot of those, Scott, long story short, a lot of those are rather new, and we don't know how we know that they'll underperform in a bull market. We know that they may overperform in a bear market, but likely haven't been tested enough. Last year was not a great test of a bear market for those things. And we just haven't seen enough bear markets in those kinds of things. And they take high fees. I mean, they take super, super high fees. So looking at NVIDIA's up again. God, that one's never going down. Target is up 6%. That was up as much as 10% pre-market. Exxon's up. Walmart's up. PXD is up. NVIDIA's up. Moderna's up. Moderna's under 100. I mean, listen, COVID's coming out, but nobody's paying for that damn booster again. Khalid, if your hair's falling out because of trading, do swing trading. Your hair doesn't fall out on swing trading, I don't think. It's day trading. Morning, Zephin. Let's do some scans. And I did get, I think it's Trevor. Trevor, I got your message, your email. I'll respond to you later today. I didn't know that these scanners are broken. Maybe the link is broken. Maybe I updated them. I don't know. Ooh, look at that. Looky. We got a cross up for NVIDIA and CRM. Let's see. Scans. Shop. An Apple cross up. Have we turned the corner? Ooh. Look. Let's go to core investments. Cleveland Cliffs cross up. Cleveland Cliffs. Have we seen another bottom under the 200-day, and we're going to go back above it? Ooh. Khalid, I don't think you should be pulling your hair. Trading is one of those things. Yeah, and I'll tell my grandfather's advice, and I'll say this over and over and over again. If you're losing sleep over a position, get out. Just get out. It's not worth it. I mean, throw it in VOO. That's if you're not beating the S&P on a regular basis, and I did not beat the S&P last year. Full disclosure, I did not beat the S&P last year. My downside was significantly lower than the S&P. Okta. But over the years, I do track it, and I beat the S&P. The one that I don't beat is the NASDAQ. The NASDAQ has been tough to beat over the years. I've done it a few years, but it's been really tough to beat. Let's do the Dow. We've had what, a 30-year bull run. I own PanW. I think it's been unfairly beaten down. Here's what you have to know about PanW. I think it was Fortinet is the one that took the leg down. Let's see. I think it was Fortinet. Yeah. And you're going to see Fortinet come back and cover this gap. It's just a good company with good earnings and good products. It just had that gap down there from the two earnings ago, where they made 44 cents and then made 34, then they made 38. They said some craziness. as far as what they see the outlook as. And that's what you have to decide, by the way, with this this market is, do you think we are going into the recession that everybody is saying is going to happen, or are we having the soft landing? If you think it's the recession and we're going to have a hard landing, you should be positioning yourself. Don't go into DraftKings. Don't go into Palantir. Don't go into NVIDIA. Don't go into that stuff. Make sure that you're taking risk that is appropriate. Did I link to that Jim Cramer? Okay, I'm going to open this up. Cathie Wood made a crazy prediction that scared the daylights out of me last night. And let's just make sure. Yes, the Darwin Awards. There we go. And there we go. Kramer tracker. We're going to go into that one. DHS. Yeah, let's look at DHS for you, Scott, before I do because I'm done on the scan. So let's go to the strategy tester and let's look at DHS. Scott, you're one of my favorites because you always say nice things. So nice people on the internet get rewarded in my world. High dividend fund has you out with a 3% gain. If this is a high dividend fund, I mean, it's getting killed just like every other high dividend fund. Let's see, DHS. 4.22%, down 6% this year. This reminds me of, let's see, SCHD. I think it. And if you want to, let's do this. Let's go to Seeking Alpha. And no, I don't want to. SCHD. This is dividend equity. Oh, come on. HD. There we go. Let's chart these two together because this one, dividend. So the difference between FinViz and Seeking Alpha, this dividend yield is forward. So, 3.54, 5-year growth rate, 13.5%. This has been a dividend lovers fund, SCHD. So let's look at DHS comparatively. And this just looks at, it doesn't look at the dividend, just looks at the returns. So let's see, year to date, DHS is down 6%, SCHD is down 2.48. 1 year, SCHD is down 4%. I mean, you can, here, let's put in SPY. We'll just put in, you know what, we'll put in VOO. Because that's what you're basically running up against. Here, Kathy's scary prediction. Read this, Sherry. Read, it's about 5 or 6 tweets. But here, Scott. So DHS, I don't know the holdings of DHS. We can look at it. But look at it against VOO. And this is what dividend stuff has done this year, is high dividend stuff has just not performed as well as the S&P 500. You look at year to date, 16% on VOO. Look at DHS, you're down 6%, SCHD. So you're down on your capital more than you're being paid on your dividend. And the reason is, if we go to SCHD, look at their top 10 holdings. AMZN, AbbVie, Home Depot, none of these are in the grade 8. Not one is in the grade 8. And it's because they don't pay, the grade 8 don't pay dividends. They're just growing so much. And if we go and look at DHS, I mean, pay attention when you get these dividend yield ones. And I hate when freaking Apple, alters that. Look at it. It's Exxon, it's Chevron, it's AbbVie. It's the same thing. Philip Morris, Cisco, Pfizer, Altria, AT&T. I mean, why would I want to own a fund that has AT&T in the top 10? Because that 2.4% dividend, their dividend is 7%, probably getting dinged. Now, it has Pioneer Natural Resources, but their top 10 holdings are 38%. The reason you're getting dinged on dividends this year is because the people that are paying dividends do not have capital appreciation. And so the capital appreciation are the non-dividend payers. And that's where you're getting dinged on SCH and DHS. So hopefully that makes sense. The algorithm has you kind of out on this one. I don't know that I necessarily get back in. You look at a weekly, it hasn't even touched the 200-day. I mean, people are not in this to trade. People are in this for the dividend. But at 4.22, buy a bond. Buy let's see. I'm going to move you over because let's see. I don't think Fidelity's going to log me in. Let's just look at Fidelity. Let's go to Fidelity. You go to fidelity.com and you just go to fixed in the middle, news and research, fixed income bond CDs. You don't have to be subscribed or a customer of Fidelity to see this. But here, U.S. Treasury, I mean, if I'm getting what is it? What are they doing? 4.22% on a U.S. Treasury? On DHS? Why wouldn't I just protect my capital? And if that's why I'm investing, just get a a 2-year Treasury or even a 1-year Treasury at 5.23. And then you pay no taxes because it's U.S. Treasury. So, Scott, and mind you, I'm a douche on the internet. 100%, I'm a douche on the internet. But the reality of the situation is when you have bond rates going the way that they do, and they are going up, the long-term bonds are going up. These 10 years that you see at 4.37 and 4.22, those were in the threes like a week ago. And that's big moves. You got the 20-year almost at 5%. These are moving up. So when you've got that at a zero risk, because worst case, you just collect that percentage every year. That's worst case. Best case, these things come down and then the actual asset. So for instance, and let me give you for instance, and I'm not a bond expert, by the way, but this was the way it was explained to me, is that the asset right now trades at, say let's just say the 5-year, or let's say 3-year at 4.64. So the 3-year at 4.64, or, we'll take 2-year, 4.98. Nice, easy number. So say it's about 5% for 2 years. So you're making 5% a year for the next 2 years, which is great. Risk-free, don't pay taxes on it. Fantastic. Well, what if that 2-year all of a sudden goes down to, say, 2%? We have something break in the economy, and it goes down to 2%. Well, this bond at 4.98 will sell for higher appreciation. So say you paid $100 for the bond or something like that. I don't know what you'd pay, but it's $100. You may be able to, a year from now, even though it's at 5%, you may be able to sell that bond for $150 because it's, you're getting 5%. Whereas if you bought a new bond today, you're only getting 2%. So the capital appreciation is happening in bonds. It's once in a lifetime. That's essentially what has been explained to me. I have not gone into bonds. And the other thing is, do not buy bond funds if this is what you're interested in. You buy bond funds to basically get you income so that you don't have to buy the bonds. But the actual bonds, bond funds, do not go up as bonds go up or down significantly. And the reason is because they constantly turn over their bonds. So they're constantly just getting new bonds. So the value of one bond is just wiped out by the bond of, buying the new bond. So hopefully that makes sense. But DHS, I'm not a fan. Okay, hold on one second. You boys got to pee. Solar Edge is in the 160s. I just saw it cross on the damn screen. Okay. I am going to start this podcast because I have got to go. The majority of stuff will happen in the newsletter. So make sure you're subscribed. It's dailystockpick.substack.com. Simple, easy, it's free. So hopefully you're subscribed. I'm going to get out of here. I've got that one. Okay, we're going to do SPY. Because I posted something yesterday. Okay. We're pulled back. Good morning. It's Wednesday, August 16th. I am starting this out with, first off, I've got so many notes. Majority of it's going to happen in the newsletter. I'm going to try and keep it to about a half hour. But the majority of this stuff will happen in the newsletter. So make sure you are subscribed. dailystockpick.substack.com. It's free. You don't have to pay. It is 100% free. The only thing that I charge for is the weekend educational emails. That's it. If you don't want to pay, you don't have to pay. But I do appreciate when people pay. So let's talk about where the markets are. China's landing hard. And we'll talk about this with Kathy Wood's prediction on China. Remember, Kathy Woods is an economist at her base. Now, I posted yesterday afternoon this SPY chart. This is the 4-hour SPY chart. And I said, hey, if we have an afternoon rally, that MACD is going to cross up. And that's going to be bullish for the stock market because we do have some turnarounds here that look like they're just oversold. That MACD is down at minus 1.29 on the oscillator. It has not been down here since March, where we rose from 395 all the way up to 460 on SPY. So it's been down this low before. Doesn't mean that it's going to automatically come back. Right now we're oversold. We're not quite oversold. The RSI is at 37. But I do tend to think that you're in August. It's a horrible, horrible month to expect a turnaround. September is even worse. October, you've had your main crashes in October. So you're just in a seasonally bad period where you need a lot of catalysts and you're just not getting them. The pain trade. And I just talked about this on YouTube live. And if you want to go back to the live, we're about, 29 minutes in. So watch the first 30 minutes of the YouTube live, the extended version. Bond yields are on the rise, specifically the 10-year. The long-term bonds are going up. We know about the short-term bonds paying about 5% for like a 6-month bond. And numbers like retail sales are going up. Target reported this morning, and they reported decent earnings. They said, hey, we might be weakening, but they reported decent earnings. And the market is positioned right now, specifically at the end of July, it was positioned for perfection. The danger is that the market is out of position. So if the market is out of position, we talked about this gap here a couple of days ago on SPY being down around 440. Well, right now we're at 442. You're kind of hanging on to that gap. If that one breaks, you're looking at probably 438 on SPY. If that one breaks, you're probably looking, just look out below because you may go down to the 200-day, which is 427. The market will correct. And I think what the market is saying to us right now is they realize the Fed will be higher for longer. No analysts, by the way, are taking their earnings estimates down. That's significant. It remains the economy is strong. It's not that the Fed wants to beat the economy down. The Fed wants to beat inflation down. And right now, they're not having significant gains. So here's the thing. If the market was panicked, the VIX would be, it's at 16.39. The VIX, remember when I started this podcast, if you guys are part of the First Off crew, we were at 30 on the VIX. Talking about going to 40, maybe 50, and that was last year. Last year was a panic. This isn't a panic. This is a simple pullback of the market got overextended, specifically on the grade 8. It got extended. Trimming those wasn't a mistake. Do you still have downside? I think you do. I've been patient with these. Yesterday, Stock Nerd bought Uber, and Uber is one of the ones that I bought at 46, I think, and it's down at 44. Let's see, in pre-market, it's at 44. He bought it at 44.30. He's buying it on the way down. This is part of the realization is it's difficult to buy on the way down, but this is when you do buy when it's down. Warren Buffett always talks about stocks that are on sale. You go to the supermarket. Do you buy the $9.99 cachet? Or do you go with the store brand for $5.99? Your boy goes with the store brand for $5.99. I like stocks on sale. This doesn't mean that Uber's a 100% buy. Look at it. It's capitulating right there. You've got probably down to the 200-day. I said I wanted it under 40. I said back here I'd like it under 30. I didn't buy it under 30. I bought it up here at about 46 on the way up right before earnings. I still like it. I think it's a $50 stock. I think as long as they continue to do a profit, I like it. Kava yesterday announced their first earnings since IPO. I typically don't buy into IPOs because they're hype, and you can see how the hype worked. This one, in pre-market, it's up at 50. I think anything below 50 on this one is good. You wanted to wait until their earnings because they are making money. It's a good brand. These are restaurants. It's Kava Group. I like the brand. I've seen Kava restaurants, and I actually ate at one, I think, while I was on the road. I like it. Let's talk about Lyft. We talked about Uber. The interesting about Lyft is Lyft was up, we got a buy-in at 1166 yesterday. And I don't want to diminish this, but the CEO bought 100,000 shares. Let's go over to FinViz and let's see, is it listed yet? 100,000 shares at 1146. Now, that doesn't mean, oh my God, and a director bought 8,000 shares, which is 99. This is $1 million. This was $100,000. Doesn't mean, listen, these guys basically get paid for this stuff. Lyft is in a price war with Uber. Uber's got the ability to reduce their prices, to squeeze their margins, and shut out competitors. Uber is worldwide. Lyft is pretty much here in the U.S. So I don't want to say it's impossible, but it's going to be hard to fill this gap up to 16. I don't think it's irreversible, but since their earnings last time where they announced, oh my God, we have some problems, blah, 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 new CEO comes in, they filled the first gap, went over the 200-day. Now, are they going to fill the second gap? If you use Lyft over Uber, buy it. I mean, I don't. I just use Uber. So Tesla, talking about full self-driving and anything that has to do with, oh, God. TrendSpider slow again. But Tesla, moving down. It's in the 220s now, the 220 handle. They're cutting prices on their Model S and X in China by 7%. This is of concern because China is the leading market. They basically have a price war going on. You're not in this as far as the 4-hour algorithm goes. I'd be careful of this one. I think it's coming down to 220. It's at 229 right now. If you want a long-term position, I would probably just start buying. Again, the best time to plant a tree was maybe 5 years ago, but the next best time to plant a tree is today. Plant your tree. That's what I say. On the flip side, if you think that Tesla is going to continue down like I do, it's on the downside of this. Maybe you want to buy TSLQ. This is an ETF that shorts Tesla. I think it's TSLI is the levered ETF. You can do your own research, find it out. 3151 was the buy-in. You're almost up 20% in this. So I have just be careful of shorting Tesla. Careful of shorting Tesla. I reiterate, careful shorting Tesla. Make sure you take your profits. Tesla has burned more than one short on the stock side. So make sure you're taking your profits. I want to talk about Microsoft now. 50% retracement from the previous highs all the way back to the most recent highs would be 290. I think Microsoft might get down there. Look at this gap. I mean, that is right at the start of this gap. I think that's, you can see volume shelf right there at 290. And that's from these highs because it retraced and then it just continued to go up. I mean, sure, it retraced a little bit. This was the big retracement in February where it went from 272 down to 250. This is part of that retracement. If the 200-day does not hold, I think you're looking at 290. Am I getting rid of some? No. Because I think, Microsoft, Satya Nadella, masterful at, hey, we just got Copilot put in here. We got ChatGPT 4 put in here. And then you're going to see it bounce up to 350. So I'm not trimming it. I do think at 290, I probably will add more. China is slowing. Expect Chinese stimulus in September. And part of this is Cathie Woods. This is what scared me. China is exporting deflation in a more profound way. And Tom Lee believes this too. Economists and strategists, all else equal, the 15% depreciation in the yuan relative to the dollar in the last year should have increased its PPI inflation rate by 15%. Instead, it dropped by 4%. In other words, the deflationary vortex emanating from China is approaching 20%, highlighted by the burgeoning defaults in Chinese real estate and trust companies. This is where she got me. China probably wants to limit, if not stop, the depreciation in CNY, the yuan. To do so, it could be selling U.S. dollars and buying the yuan, effectively tightening its monetary policy and exacerbating the economy's weakness, even as it is easing. In our view, the Fed has precipitated and exacerbated the risk of a global deflationary bust. The impact of its record-breaking 22-fold increase in the Fed's fund rate could be hitting China first and spread to the rest of the world. That's dangerous. She's an economist. Understand, her basis is that she's an economist. That's what worries me. So, take it for what it's worth. I do think that Chinese companies, I think like Baba is pulling back. I think you can invest in those, but be careful because if China does start to blow up with some real estate stuff and they start doing what Cathie says, which is buying the yuan and selling U.S. dollars, that could reverberate around the world. Remember, they are one of the top, I think it's the second largest economy. We may be the largest. They may even be the largest economy. I just don't know. But be very, very careful of that and keep an eye on it. Now, and Baba here, you got out with a 3% gain. You could have gotten out over 100. You're down at 89 again. It's just continuing to fall. So hopefully if you got into Baba, you got your profits. Now I want to talk about PayPal, because PayPal, we may be backing up the Brinks truck on PayPal, because you know what happened yesterday? Jim Cramer, after loving PayPal at 200, 225, 250, and even 300, Jim has officially thrown in the towel at $63. I don't want to own the stock. Jim has officially thrown in the towel on PayPal. Now they've got a new CEO. The algorithm got you in at 62, got you right back out on the next candle with a 5% loss. They do have a new CEO. He's starting in September. He has a background at Intuit with mergers and acquisitions. So I want you to just keep an eye on it. I'm holding it. I'm holding it long term. I've got it in a retirement account where I do have a losing position on it. But I think I've said it before. I think if they get things straightened out with their margins, that $85 price target, I think you're fine. I think you come back up and fill at least this gap up to 72. So if you want to buy it, I think you can. Don't fall asleep on SOFI. That's my note in my thing. While student loans repayments start back up and it's September, remember, they will not ding you or charge you interest if you don't pay. If you simply don't pay, there's no ramifications. That's what the Biden administration has said. That's why this stock is falling. Understand, there will be people who don't pay. But the reality is not everyone is tuned into the news. Not everyone is tuned into podcasts. Not everyone cares what Biden says. Not everyone is listening to the government saying, oh my God, you'd have to pay. Do you think these companies are going out there and sending a letter to all of their student loans and saying, you don't have to pay? No, it's Congress people who are sitting up there saying you don't have to pay. And nobody listens to those douchebags. So under $9, I think this one's a long-term buy. Understand that this one could easily go back down to that $5 range, $6 range. I think that 200-day is going to provide some support at about $7. But you can see we're below volume shelves. We're not making new volume shelves. You got no confirmation. Right now it's down 0.36%. The $8 handle may provide some support, but I don't want you to fall asleep on this one. I think this one could be a good one. Let's talk energy, because Energy Transfer, if you remember, this was the one where the CEO bought a shit ton while it was up here. I think he bought it at 11. Let's see. Let's go over to FinViz because I wrote this down. They had all the insider buys. Let's see. Energy Transfer, yep. I mean, millions of dollars at between $12 and $13. This one's at $12.67. So you can buy with the CEO. Now, here's the thing. Not only is it great, you could get 9.87% dividend yield. 9.87% dividend yield. I like it. I like it a lot. The CEO likes it a lot. I think you should get into it. Now, other energy, Boyle. Boyle is under 70. Let's see. It's at TrendSpider. Come on, 66.30. It is down 3% today. I think you're still in that $66 buy. It's at 66.30. You're getting it just below this buy. The algorithm hasn't gotten you out. It's just kind of flat. I mean, let's be honest. This one's just kind of performing. I think you use the RSI, and when you're under 50, I think you buy it. And then it goes over 50. Oil, natural gas is just going to start. It's August. Natural gas, it doesn't have demand right now. But in the winter, you're going to have demand. And if the Ukrainian war is still going on, then yeah, you got a bunch. I'm going to include Substack is expanding its where I host my newsletter, dailystockpick.substack.com. They're turning into a social network where you can like things and follow people. So it'd be interesting to see. I also will include, if any of you want to start a side gig, I found this in-demand freelance job pays up to $250 an hour. And you know what it is, ironically? It's writing. And since I started this this newsletter, I have gotten so many social media folks, that agencies, hey, we like your writing. We like your newsletter. Do you want to write for us? And it pays $250 an hour, because now I have a portfolio that I can send people to and say, hey, here's how I write. Look at how I write. So interesting stuff. Another personal thing that I will tell you, episode 100 of the Darwin Awards, N2Backpacking.com. I will include the link in the newsletter. This is the Spotify version. You can listen on Spotify. You can listen on Apple Podcasts. My name is Drone Boy. That's my trail name. I did not have a choice in it. You can read it. If you want to go to the link that I provide in the podcast, then you can read my stuff. You'll get to hear. I get taken on. I mean, I have 2 incidents where Darwin Award where I should have died, and we go over those. I didn't almost die. Just, it was basically ginger kid being out in the thing. Target reported earnings. We talk about Target all the time, and I have not pounded the pavement on Target because they still have problems. They missed quarterly sales expectations and slashed full year forecast. It had trouble convincing shoppers to buy more than the necessities. They cut both its full year sales and profit expectations. They offered a very gloomy outlook. This one, you've already got a 3% candle in the morning here, and it's down at its low of the morning. I think it's going to get taken back. I think you're going to see it probably at this 125. Even as sales lagged, the retailer's profits rebounded. Target's fiscal second quarter net income rose $835 million or $1.80 per share from $183 million or 39 cents per share from the last one. So here's what you have to know about Target. This is a long-term turnaround plan. I don't expect it to get back to its 200-day, which is at 150 on this report. They still have inventory problems. They still have issues. We talk about it all the time. A good company, a good stock with good products. They have good products with good earnings. They have good earnings, just not as good before. The management is the issue. And so I would look to potential of the board maybe replacing some of the management here because they just haven't made good decisions. What was interesting about this one, they said beauty is driving revenue. Sales at Ulta, at Target, mini shops inside the store, more than doubled compared to a year ago. Sales of other beauty items rose by double digits. So that's e.l.f. That is Sherry's e.l.f. This is Ulta. Your boy owns Ulta. I own Ulta, and I think I'm positive on it, but it's marginal. Ulta, as far as the 4-hour algorithm goes, let's look at it. Are they getting a boost today? They are up 1% at 460. You are in a buy at 437 here. Bounced right off that gap. Right off that gap there. Hasn't filled that gap. The 200-day at 483 will absolutely provide some resistance on e.l.f. On Ulta. Now let's look at e.l.f. because e.l.f. is the one that I probably should have bought when I bought Ulta because that one has just skyrocketed and it most likely is not pulling back because the valuation isn't crazy as far as the growth goes. You can see the gap that the earnings presented right here between 117 and 125. You're still in at this 116 buy. I think I bought Ulta around when it was at 100 and I'd be up 32% on this one. Whereas Ulta, I'm even. Be careful with this one. You got the MACD crossing down. You got the RSI a little high. So I don't know that I'd necessarily get into it, but I do think that they have a significant upside growth even from here. I will include the link to the Target article that I read on CNBC about it. TJX, they announced this morning. They beat. This is TJ Maxx. This is Home Goods. If you've refurnished a house before, Home Goods has all those cool little things that you buy. If you need towels, then yeah, you got towels, at your Home Goods stuff. These guys are up 2.65% after their earnings. They're in that rising wedge. They're above that rising wedge. The MACD isn't crazy high. Ironically, it's not crazy high. Let's look at a weekly on this one. You're in a buy on this one. So, and it continues to be strong. This one's well above the 50-day, well above the 200-day. You got well above the 9-day. I like this one. And I don't think that it's coming back to this $50. You're at all-time highs on this one. It's just hard to pull the trigger on that. Intel is not buying Tower Semi. Tower Semiconductors, their shares, Intel's going up. It's up by 3% because they don't have to spend the billions of dollars in capital to buy Tower Semi. It was a bad buy in the first place. a bad buy in the first place. So, yeah, I mean, just Intel's Intel. I mean, I'd buy NVIDIA over Intel, even though Intel probably is a $50 stock at some point in time in the next couple of years. I'm just not excited by Intel. Their chips suck. Coinbase it looks like they got approval, or they're indicating that they will get approval to offer futures trading. This could mean futures trading on Bitcoin. This could mean futures trading on crypto. If they get approval to do things like that, you can expect an ETF on Bitcoin to be approved. Coinbase right now is up 3% at 81. If you want to get into this one, I think the 200-day is where the support is at 70. I think you start adding this one when the 7 handle comes in. Yesterday, did it get to 70s? It got to low of, in the morning it got to 79.11. I think 70s is where you want to be at. I just don't think, even with this approval, it's just not pushing high enough for me to say absolutely 100% you should get into it. I will include some education about the 50-day and using 50-day as a trade. Try and make sure that you have the 50-day EMA. New Trader University put this one in, and it's a great read. I like it. I'll include it in the newsletter. So who was it? Chris. I don't have Facebook, Twitter, or any social, so I figured I'd shoot you a message on, and he did it on Substack. Again, you guys, if you need to get a hold of me at all, here is all the socials that I'm on. If you don't have any socials, you can write a comment on Substack. It's open to everybody. So if you just go to dailystockpick.substack.com, you can just go to that and just comment down below. And he did comment down below. The other thing you can do is email me. Up here is my email, and you can just email me. But Chris has some great stuff. I'm expecting cyclical change to hit pretty hard after the run we had. Been in and out of SQQQ. I do think SQQQ has been the play. You can see, but TQQQ under 40 makes me think that, there's a rally kind of coming. But again, that's just hunches. That's nothing that's in there. Shooting for 30 to 45 day hold on that one. SRAT EMA 200 crossed up. He's sharing charts. SPXU, he's sharing charts. QID, he's sharing charts. Side note, I've been working on a strategy. Keeps me in a bit longer than your 4 hour, but works with certain stocks and longer hold expectations. And he shares a link. Chris, I am putting that in the newsletter. I'm going to import it. I'm going to look at it. I like it. I took an initial look at it, but I like it. Let's talk about scans. First one that scanned is NVIDIA. NVIDIA gets you back in at, let's say, TrendSpider is working and thinking. It got you out here with a nice 2% gain, 444.81, and you're at 443 right now. I don't think it's crazy to buy at that level. I will probably be buying again. Their earnings are coming up August 23rd. Here's the thing that you have to know. They're going to need to blow earnings out of the water to justify that last pop. But with everything that we've been seeing on the free market of buys of NVIDIA chips, they can't make enough. And when you can't make enough, you can charge more. And when you charge more, you earn more. So while it might be that they're going to charge more next year and the revenue may not be realized this year, they're going to be able to charge more. So NVIDIA, I do expect that one to pop again. I expect it to get back to 500. If you get back to 500, that's over 10%. So I'm holding. I've got one lot down here at about I think it was 299 is where I pulled the trigger. And I've got one up here at, I think, about 460 is where I bought, 450 something. So I'm holding both. I'm not selling them, but that's the first cross up. Second cross up is Salesforce CRM. We saw this one rise, and Elliott Management took a position in this one. You're seeing the 200-day provide support, $210.33. I don't think it's crazy. I don't think that you're immediately going back to that 230. You can see it hasn't been nuts. It kind of capitulates right here at about 200. They've got the second Mark Benioff mentions, AI. You're in. I mean, you're at 230. Next one is Shopify. And this is part of the core portfolio. I've said this before. I think this is a $70 stock by the end of the year. Their last earnings call, they had some issues. They announced that they were seeing some weakness, blah, 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 the whole thing. It just got killed. Well, we talk about it all the time. Any reaction in the market is an overreaction. Look at the Bollinger Band syncing up. $55.88. I will be reluctantly small on this one. I'd love to go big, but I already have a large position, and I believe my average price is around $65, $67, I think. But I do have a large position in this one. I believe in it long term. You talk to any small business owner who wants to get into e-commerce, that's where they're going. You know where we got a big cross up? On your boy's number one position, Apple. Here's the thing. I don't think we're done going down on Apple. I think that 200-day is providing that support. You've got one more gap down here to 167. I do not think you should wait to add. Apple is just one of those things. They're going to introduce the iPhone 15. I will buy the iPhone 15. They are making it in India. They are making it in China. So I do think that they're going to announce the iPhone 15. You will see it with USB-C. You won't see a huge US population buying it, but there's a lot of upgrades that are available around the world. And China, I think they'll start to buy it. Cleveland Cliffs. We talked about this one. They wanted to buy US Steel. They're down another 1.35, 1.4% today. We got a buy-in on this one. I think 15 is your floor. This is where the CEO bought a ton, around 15 here, 1576. You're down at 1533. I will be adding more to this because I like this gap down here at about 14. I will be holding off on adding anything until I see some big move because right now I don't see any confirmation. It's at 1532. We are continuing that slide. TECL got an update, which is a levered ETF. TECL is technology bull 3 times. So the technology has been beaten down. You want to buy something that's been beaten down? It's a 3 times levered ETF on the technology sector. And it's 47.42. The 200-day right here at 44. You might be able to get down there. Don't know. Right now, today, it's at 47.49, so it's up 0.42. The day is going pretty well. So, TECL, Okta, Workday, Synoptis. Workday had some earnings. I think they had earnings or they had an announcement. Let me look at that one because this one, huge. This is a payroll software company, Workday. You see them on the PGA Tour. They're announcing PGA Tour stuff. This was 230.93. I mean, from a long-term standpoint, you can't not like this one on a weekly. It's kind of found its way again. And this is after being, the payroll choice for the pandemic. Last year, it just got beaten down. I mean, we're from 280 and it went down to 130 July of last year. And ever since the October lows where it was about 140, your 240 still have confirmation and you're just above the 200-day. So expect this one to get back to its 280s at some point in time. SNPS and ALGN also had cross-ups. I will include a lot of things that I did not go over in the newsletter. So make sure you are subscribed, dailystockpick.substack.com. It is 100% free. If I mumble and you don't understand it and you don't get my ASMR, it's Linktree, linktr.ee/dailystockpick. And that has all the links that you need. TrendSpider, 25% off. Visible, get $20 off your first month of service. The one that I'd really like you to click on, and I do think you guys should get, is Webull, this third one. Get free stocks. And put in $3. You'll get some free stocks. I mean, I think they'll give you 30, 40 cents of stocks. It's fractional shares. So it depends on how much money you put in. I think if you put in $3,000, I think they try and close to match it or something. But you'll get some free shares, however much you want to put in there. But the reason I want you to get it is A, they have great desktop software for you to track and chart. You should absolutely be charting. And B, I like their news. Their news and stuff is just top notch. It's so much better than Fidelity's app as far as news and outlines go. The other thing that I'd like you to do is go to Savvy Trader. This one, Savvy Trader, SAVVYTRADER.com/daily stock pick. I've got 2 portfolios here. The trading portfolio, which over 30 days is down 5%. Daily stock, this is the one that you really should subscribe to. Both of these are free. And daily stock pick, the core portfolio, it's just 100 shares of, and I have to put Eli Lilly in here. I just keep forgetting. But it's the stocks that I suggest that you own. I own all but 3 of these. I don't own Roblox, and I don't own Moderna. Those are the only 2 I think that I don't own. Yeah, I own everything else. So that I can see. I thought there were 3, but Qualcomm. Qualcomm I do not own. And Merck. So 4 stocks. I don't own those 4, but I do think that listen. I own a bunch of AMD and a bunch of NVIDIA. So I'm in chips. I think Qualcomm is probably the most stable of the chip companies. But I like the growth of AMD and I like the explosiveness of NVIDIA. So between those 2, I own a bunch. We're talking 6 figures between the 2. The majority of that is in AMD, which unfortunately just hasn't taken off the way NVIDIA has. So if you have any questions, again, daily stock trade, you should be on Savvy Trader. The reason you should be on Savvy Trader is identifying your trades. Because if you're new to trading, you can paper trade on here. You can keep track of it. And here, the history. Put in why. This is where you journal. Put in why you bought it. DraftKings, I bought it, 300. I think it gets back to 30 this week. Let's see where DraftKings is right now. It's at 28.18. It's going to be hard to get back to 30 because it's got no confirmation. So maybe I was wrong. Here, NVIDIA, I bought it for $468.78. I'm down on this one. Do I care? Hell no, I don't care. It's a $500 stock by the end of the year. I'll buy more. Uber, I bought it $47.99. I will buy more. It's at 44 right now. It's continually falling. Meta, I bought under 300. I think 300 is your bounce. I think you can buy it here today. What's Meta at? Let's see. Meta is at 298. It's under 300. Buy it again. I'm just going to buy it again. Honestly, I'll just buy it again. But you can see, going back on here and just make sure. Netflix, 435. What's Netflix at? Let's see. Netflix, 422. Again, you can look at that. You can track your stock picks. You can see where you're at because I do think you should be tracking all of this. Yes, I'm down. I don't think I'm down for this. Look, I bought 100 shares of TQQQ for a 17.56% gain. That was just on July 19th. And the only reason I sold it, I could have gotten out with even more over the next couple of days. I remember I sold it because I had COVID and I was afraid of brain fog and not being able to get in. So if you have any questions, hit me up. I am going hiking. The newsletter will be out in a bit. I will talk to you guys later. Have fun. Okay. And we're going to export. I got an hour to get everything done. And I know ELF is really good. I should have invested in ELF, but you know what scared me, Sherry? I'm old. I'm a boomer. I'm a guy. I don't wear makeup. Let's see. Core portfolio. Apple's up. Boeing's up. Bank of America's down under 30. Don't fall asleep on that one. Google's under 130. Coke is almost under 60 again. Moderna's under 100. Microsoft at 321, under 330. Get it. We talked about Meta, under 300. Get it. PXD is up 1%. Qualcomm at 111. Thanks, Scott. See, positivity on the internet. It's still there. Oh, and I got to... Let me grab my laptop. I got a Bluetooth AirDrop. God, I fucking hate all of these commercials that Jim Cramer's investing club has. The guy basically, he got on there last night and he said, we bought a bunch of stock. And you know what? If you're in the investing club, we told you. Oh, look at Target up 5% again. We bought a bunch. 130 is your bounce on Target, by the way. I have to. But yeah, and he said, I mean, listen, I get it. I run a paid newsletter. I feel like the people should be getting value. I wonder if fucking Jim Cramer is listening to my ass because he said the same thing I said on my podcast. Let's be honest, he ain't listening to my podcast. Let's see. We're going to delete those, move to trash, and then bum. Did I export that already? It's currently exporting. I am going to, I did not move those to trash. We're going to share AirDrop to MacBook Pro. Come on, work for me, will you? There we go. Sending downloads. Let me close this out. Okay. And gonna move that over there. And then we're gonna quit this. Oh, come on, GarageBand, move over there. Quit GarageBand. Save that mofo. Done. And then share. AirDrop, MacBook Pro. It should be quick. This one's small because it's just a voice file. And sent. Done. Okay. Boom. I should, Scott. I did, Scott. I had a lot in QQQ, and I sold it. I think I bought more Apple. This was years ago. And here, we'll take a look. Let's go to Seeking Alpha. And I think it was 2018. So we'll do a charting because I think it was 2018. I decided I wanted more exposure to Apple on a pullback, and I had to decide, okay, do I want QQQ or do I want Apple? And so here's 5 years. I mean, look, I think it was 2018 or so. So 5 years. And I decided I just, QQQ wasn't doing, I forget there was a catalyst of some reason that made me sell out, but I should have QQQ. The problem is the volatility. And, you know what? Maybe it was, yeah. I think I was approaching my 50th birthday. No. Must have been my 45th. So it was like 2015. Must have been my 45th. And I said, I want more exposure to something that is less volatile, and Apple was less volatile because the ecosystem made sense to me. So it must have been 2015, 2016. And I said, I'm taking my QQQ, and I should have just trimmed it and done a smart thing. But at that time, I was probably a lot more risky, and I just said, fuck it, YOLO. And I went all in on Apple. So I should have it, but you're right. 100% you're right. I should take my VOO, by the way, that I have and put it into QQQ. I should have done that at the beginning of the year, because if we just look at VOO, I mean, it's underperforming the Qs. And the other question, by the way, if you're going to ask it is, well, if you're going to have QQQ, why don't you have TQQQ? Because if we add TQQQ into this, it is crazy. The performance of TQQQ up 139%. Now, Apple over this time is up 237%, so it does beat it. But TQQQ outperforms QQQ by almost 40% over 5 years. Now, 3 years, let's see. TQQQ up 18%. This is a very good reason as to why TQQ is not good. Look at how QQQ is pretty steady in the middle, and how TQQQ is way up and then way down. And if you think that you can time these things, good luck, because you're just not going to be that good to time it. You're not going to hit the top. You're not even going to hit 10% down. You can have a 5% stop loss on it, but you're probably getting stopped out a bunch of times. And you can try and do that type of thing. But Humphrey Yang goes over it. Let me see. Let's see. On YouTube. There he is. He has a great YouTube video, and I think it's mistake number 3 or something, if I'm not mistaken. Let's see. The 4% rule. Don't hold cash. How to get a credit score. Let's see. He does great videos. Yeah. This video, if you want to watch it, Scott. This is your, I think it's lesson number 2, if I'm not mistaken. Let's see. I think he's pretty good about putting timestamps in.
To number 2, this one is not so obvious, but I will still rate it a 4 out of 5 stars. And these are leveraged funds. Yeah. This is a type of investment that amplifies the return of whatever you're investing into. In the most common scenario, a leveraged fund will track an underlying index, and they will use financial derivatives like options to try to amplify those returns. That sounds way more complicated than it should be, but it basically means this. So if an index you're tracking is up 1%,
I'll let you guys watch it. But you want to watch that one. It is fantastic. It is a masterclass in why you don't want to long-term invest in levered ETFs. And this shows it. This chart shows it exactly. You're way up and you're doing really well. But then in times of bad times, you're triple levered and it's on its way down triple levered. So it's an interesting kind of thing. Ape love ape. What's Yell? Oh, is that Yelp? Oh, Yellow Corporation. I think they stopped trading. Didn't they? Yeah, over the counter. Ape loves ape. Yeah. I'm 52. I ain't playing that game. Get wiped out. You can trade it. Over the counter. Have at it. I completely condone trading stuff like that. If you can make money in it, go ahead and trade it. I would just be careful because the rug pulls happen. They can get halted. Over the counter is significantly more volatile because there are less restrictions. Old Dominion Freight Line, I like it, T-Dog. It's a nice steady. I mean, it's railroads. I would tell you, if you want to buy railroads, just buy Berkshire. I mean, buy Berkshire Hathaway, BRK.B. Just buy BRK.B. Okay, it's 10 o'clock. I got an hour to do this newsletter, so I will talk to you guys tomorrow. Remember, subscribe to the newsletter. Thank you, everybody. If you're here and you're still here, just hit the thumbs up button. Take care. See you tomorrow.